It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
I put one of those social media apps on my phone to tell me how much social media I am consuming every day. And I got to tell you, I was extremely shocked. I am on my phone 28 minutes a day. And I thought, well, that's got to stop. That's got to come down. Almost half an hour a day I am losing from staring at my screen. How bad is your addiction? Let's go to Sydney and catch up with Veronica Morgan from Good Deeds. Welcome to the Real Estate Breakfast. Have you calculated your total social media time on your phone?
Good morning, Craig. No, I haven't. I would think 28 minutes a day sounds light on compared to what a lot of people would be spending. I would hope I'm only spending that on it. I suspect a little bit more because I do use it for work. You know, I do post a bit on LinkedIn and comment on LinkedIn, also on Instagram, a little bit sort of Facebook, sort of personal. It shows my age, I guess. But I try to limit it and I try to stay off it and get out of the doom scrolls, that's for sure. But, you know, I'd be really happy if I was only 28 minutes a day because I am using it professionally as well.
Yeah. But what about walking around using the camera on your phone as a periscope for looking where you're going?
That is next level. You know, it's interesting. Whenever I go to a concert and I see these people who basically record the whole concert on their phones, and I'm like, you're here. Are you really going to go away and watch any of this stuff? Because, you know, every now and then I do record a little bit and I've very rarely gone back and watched any of it. Like, it's pretty sad that you're actually experiencing life like through the lens as opposed to, or through your screen as opposed to actually experiencing life. I think that's really scary.
Yes, no, that is absolutely 100%. I never understand why people do that. They're spending hundreds of dollars on these concert tickets. Some of them are streaming it, which means if they're streaming it, they can do that stream for the entire concert, which is, well, it's just daft, if I'm to coin an old 70s phrase. And regarding the phone, you know, what I do when I'm out, I leave my phone in my car as much as possible. People who know me know that this is my behaviour because I do try to live as much as possible in the 1980s. It was a much simpler life and less noise.
I have the discipline of not sleeping next to my phone. So I have to get up and go and get it. If I do decide I want to start scrolling in the middle of the night, which a lot of people do, I think it's really a height of rudeness to sit at the dinner table and be scrolling your phone. And you know, there are some pretty bad manners out there in the sense that it's like, please pay attention to the people you're with. You know, stop trying to pay attention to people you're not with. And certainly with my daughter, I've got a 19-year-old and she's probably walks around using a phone as a periscope. I don't know, but we don't have the phone at the dinner table. And even when we're driving around, obviously not when she's driving, but if I'm driving, I'm like, please, can you put that away? Talk to me. You know, you need to be vigilant. And sometimes it's funny, my daughter visited some family recently and came away and said, you know what, Mum, I'm so glad that you were really strict with me about the phone in my bedroom and everything when I was younger, because we've got family members who are so addicted to their phones, they actually don't have a life. That is their whole life, and which is really sad. And so that's her observations. I'm glad that now she's a little bit older, she's thanking me for that discipline.
One of the key things about next year has happened, and that was with Michelle Bullock. You know, the RBA, they're a little bit nervous at this time of the year because of the Christmas spend. What is that going to do with the economy? All eyes are going to be on the first quarter of next year, which is fast looming, as to what they might do.
Well, yeah, I think the markets were pricing in rate drops at some point in 2026 for some time. And in fact, earlier in the year, in 2025, they were thinking that there was going to be more in 2025. And in the last couple of weeks, we've seen a complete about face. And now even some markets are pricing in, you know, some increases in 2026. But I guess what I would say is to be careful about thinking that that's doom and gloom for the property market. We can argue whether prices should or shouldn't continue rising at the rate that they have been in various markets or not. Be that as it may, if interest rates were purely responsible for price movements, then you would not have had booms in sort of Brisbane, Adelaide and Perth in 2023 when rates were still rising. Melbourne should have taken off in 2025 when rates started falling, you know. So I think what we need to recognise is that Australia is more than just one property market. Not all markets move in sync. Even within a capital city, you've got different, you know, you've got micro markets, and interest rates don't affect everybody equally. If you really don't want rates to go up and your mortgage repayments to go up, then stop spending at Christmas on bulk,
Now, I just want to give you some context to the dollars that we're going to be talking about, because if you break down 500,000 Australian dollars in local money, that breaks down to 1.2 million dirhams. And there are some cheap examples that we're going to be giving. For example, buying in local currency and spending 350,000 local money. Now, that is converted into Aussie dollars of just over $122,000. And we'll also look at the capital of Abu Dhabi prices. So let's go to Mario Volpi, our expert resident on the ground in the UAE. And let's kick off with Dubai. And for people trying to make sense of the apartment market, there are people, nurses perhaps, builders, these people that are looking for these cheaper stock options. And you want to start us off in areas like International City, Discovery Gardens, and some parts of Dubai South with those price points.
Yeah, that's right, Craig. And just to add to that, there are also teachers. Education is a very big growing sector here in the UAE and Dubai especially. Teaching staff need somewhere to live, and often they look for the more affordable areas. So if we start with the one bedroom range, in the areas that you've mentioned, you're looking for purchasing power of around sort of 450,000 going up to 700,000 for a one bedroom. The two bedrooms, they start probably around 700,000 and go up just over the million mark. Now, these are practical value locations where unit sizes tend to be a little bit smaller, but the price per square foot is actually low.
Yes, and if you are perhaps a couple or you are married and you've got those two joint incomes coming in, perhaps you might be looking at the mid-market tiers. And what have you got for us here?
Yeah, so as you mentioned earlier, the mid-market locations probably would encompass locations like JVC, Dubai Silicon Oasis, JLT, and Arjan. Now, Arjan is an up-and-coming area. Now, if we look at one-bedroom prices for sale, they would start around the sort of 850 mark and probably go as high as just over 1.2 million. For the two bedrooms, I would say you're probably looking around 1.2 all the way up to about 1.8 million.
And if you're doing pretty well for yourself, you might be coming to Dubai with a business. You might have a successful business offshore. Let's look at some of the premium stock.
Yeah, premium stock, there's no surprises there. You're looking at downtown with the Burj Khalifa, Dubai Mall, Palm Jumeirah, my favorite one, Dubai Marina around the corner from where I live, and indeed Emaar Beachfront. We could probably add also Blue Waters Island there. Now, for the one bedrooms, you're probably looking at around 1.2 all the way up to around 2.1 million, but you've got to really scout around to get the lower end of that range. And with downtown and the Palm is probably more at the upper end of those areas. Now, for the two bedrooms, it's a bit more difficult, as there would be a large variance in prices for sea views or indeed penthouses. But generally speaking, I'd say you're probably looking around 2 million to start, going all the way up to sort of 4 million plus. Now, prime waterfronts and Burj Khalifa views obviously sit well above these sort of city averages, but they're in a different market bucket altogether. So market trackers put average apartment prices for Dubai this year in the region of around 1.4 to 1.6 million overall, but prime districts, they skew this figure much, much higher.
Now, let's shift our attention to Abu Dhabi when it comes to the price spread, because it is pretty wide. There are budget-friendly pockets along with mid-tier areas like Al Reem and Khalifa City A. So kick us off here, Mario, some of those most affordable areas.
For Abu Dhabi, then, the most affordable areas are the Musafa outskirts, Najmat and Al Bahia fringes. In these locations, the prices range from around about 350 going up to around 550,000. And these for the one bedrooms. For the two bedroom apartments, you're talking probably just over 550,000 going all the way up to 900. The mid-tier locations, Yep, you're right. Khalifa City A, Al Reem Island, and also areas called Al Nayan, where the prices for one bedrooms would start around 600 and go up to probably around 850. Now, for the two bedrooms, it's going to be between 900,000 up to around 1.4. Recent transaction numbers for the first half of this year show that Al Reem one bed sales are moving in the sort of close to 500 to 700 band. Now, for the top tier, I would quote Saadiyat Island, Al Khalidia, Prime Towers, Western Corniche, specifically the Nation Towers. Here, the one bedrooms would be from around 850 to around 1.6 million. And if we then turn our attention to the two beds, you're probably looking around 1.5 million all the way up to 3 million plus. But for prime waterfront, I would say it would be Saadiyat Island and the Corniche locations.
Good morning. Definitely has been a while, and congratulations on all the so many great episodes that you've been doing, Craig. But yet definitely the Brisbane property market is one of the hottest markets across the country right now. You're definitely correct in saying that the unit market has taken off and is kind of like a jet. House prices is still high, but unit price growth is definitely higher than house price growth right now across Brisbane.
And I guess what is fueling that top end of the market when it comes to the unit and that example of 1.1 million, if you go to the lower market, the lower range in the units, of course, you've got that 5% guarantee scheme. Everybody is jumping into the units. And how many times have we talked about, houses are always, from an investment point of view, so much greater than units, but that curve is starting to get a little straighter now because of people in that unit market chasing those properties.
It definitely has. The main reason for this is pretty much, to be honest with you, the lack of available houses. And what I mean by that, you've just spoken about how downsizers are looking for, smaller properties and they're going into units. So what we're seeing in Brisbane is because we don't have enough houses for everyone, whether you're a downsizer going from, say, a 4 or 5 bedroom house and wanting something that's like 2 to 3 bedrooms, or you're a newcomer to the market, there isn't enough house stock. And when there isn't enough house stock, what happens is that house buyers that has the budget for a house then starts to look into the unit market. And they then bring that house budget, they bring that profit that they've made from selling their big houses into the unit market. And that increases the unit price even more so than what we've expected.
Yeah, so those downsizers, they are definitely fueling the top end of the unit range. Since we're talking about top end, we should mention Byron Bay because it is flirting at the moment with that $3 million club range. What do you think of Byron Bay prices? Do you feel that there is too much hype around this location for the price? It seems that whenever Byron Bay is mentioned, the Hemsworth brothers are talked about in the same breath. Is this just adding to the hype? The brothers, of course, they're doing very nicely from the rising Byron prices. And it's like anything, lots of Instagram, social media posts, plenty of attention. That is going to help fuel perhaps a false real estate pricing for the market. Do you see that this is justified with the prices? What do you think? You can leave us a voice message. We would love to hear your thoughts, or you can email us, myrealestatepodcast@gmail.com. Asti, over to you. This market starting to really heat up again.
You know what? Byron Bay has always been a very interesting market because if we look at the trends in Byron Bay in the dips and like when it goes up, it's a little bit seasonal in the way that it's very different to Brisbane that has that constant growth over time where we can definitely see, if we look at it from a graphical perspective, we can see the curve going up and up in a steady sort of pace. Whereas Byron Bay, it's almost like a roller coaster where you've got the and then the down and then the up and then the down. And a lot of it does coincide with how much Byron Bay is getting attention. If you remember, Craig, the very first time that Byron Bay kind of exploded in terms of pricing is when we did have quite a lot of Hollywood actors floating around the area. We had that Netflix series. I don't know if you know of it, or I actually watched it. I'm going to confess that I actually did watch it, called Byron Bays, like BAE. It wasn't just the Hemsworth brothers. I think even Zac Efron was going there. You know, there was quite a lot of other Hollywood actors that was going there. And then it became a hype, and, you know, there was a Netflix series, there was a lot of Instagram about it, all of that kind of thing. I don't think that it's exclusive to Byron Bay. We've seen that happen to other parts of Australia and even other parts of cities and kind of like coastal places around the world. Social media does definitely play a large issue in this. The stock in Byron Bay itself is very, very low. We don't see a lot of new houses, new units being created in Byron Bay. And so it's seasonal in the sense that when it's popular, we do see a big, massive spike in demand. And because it's seasonal, developers and even the council can't rely on that demand always being there. And so they're also quite cautious about then building new products in Byron Bay. So when the demand does spike up, then the supply never catches up. It's never there. And so that's why we see these massive spikes in Byron Bay.
We connect you to the best real estate information across Australia. The Real Estate Podcast.